Today, August 24, GAP, GPS ticker symbol, will report earnings after hours. So in less than 1 hour. And this is the reason why GAP may gap up after earnings. So let's get right to it. As you can see, today's unusual options activity on the options time and sales tape, there is nothing that significant. However, we have been tracking this stock for some time, and yesterday, as you can see, August 23rd, we had detected unusual options at the money. 9.5 strike calls expiring tomorrow, August 25. There was a total of 13,000 volume yesterday. You can see that there's opening trades here because this is larger than the open interest of 3,000. And they were buying this for around $70. And you can see that the value of about, let's say we priced it at the closing of the day at $74. You multiply that by about 13,463, a total of value here of $996,000 of value here on these call options. Okay, and it's not quite $1 million, but if you are interested in $1 million trades that usually have a higher probability of being accurate, join our membership where we share exclusive videos to our members whenever we detect unusual options activity on any stock that have greater than $1 million in unusual options activity. And these unusual options, you can see here today, are here. Now we have an open interest of 16,000 in total now, right? So the way we are trading it, slightly different, because as you can see, by buying these call strikes, you can see that the theta decay here is quite strong, negative 46 decay in time. So there is quite a lot of risk here. And also there is this positive volatility that is also not very advantageous to the trade because there is no selling of any options. This is purely just buying options. And usually before earnings, you do want to sell some options to reduce the cost and to take advantage of the higher volatility to collect better premiums. And so that is what we did for our strategy for earnings. For the August 25s, we sold the 11 strike calls and we bought the September 15 expiration dates, 22 days away. So it has a less negative theta decay at the 10 strike calls here. Okay, and so this strategy is known as the diagonal trade strategy. This is a bullish diagonal going long, as you can see here, as the price 9.64 as it goes up, which is what we anticipate based on those unusual options yesterday. This profit loss graph is above the zero line here, which is profit. Anything above is profit, anything below is a loss. And you can also see here the positive 25 delta. Anything with a positive is a bullish trade. Anything negative is a bearish trade. And here we have a positive 13 theta. And so time is working in our favor for this strategy. So it will gain in value as time goes on. And that is why we like this trade better, even though there may be a positive vega, but because of this positive theta, this can offset the potential volatility crush that happens after earnings. So that's why we're going with this trade strategy. It also costs less. You can see that it only costs $46 per trade here, whereas the call options currently going for about $67 each. Okay, and so we'll find out in tomorrow actually what happens to the trade. Usually after hours, things can kind of change back and forth, just like what happened to NVIDIA as well, going very differently after the market opens. So any kind of reaction after hours, take that with a grain of salt, and let's wait for market open. All right, so that is our analysis of these unusual options that we detected yesterday. All right, so that's why it's very important to also monitor unusual object activity every day. All right, and that is what we do. And if you're interested, again, in our stock picks on unusual options, make sure to subscribe and also join our membership club for the exclusive videos on trades that exceed $1 million. Take care, everybody. And as usual, please smash that like button, and good luck and take care.